Hello and welcome to the 2020 Form W4 presentation sponsored by Berkey & Cox. I'm your presenter, Ray Langley. Here's our official Berkey & Cox legal disclaimer. As we are all genetically different, we are all financially unique as well. Therefore, every W4 is going to be a bit different. Now, what is the Form W4? The Form W4 is a form that employees use to instruct employers as to how much federal tax is to be withheld from each of their paychecks. A W4 must be filled out anytime a person starts a new job and is updated anytime a person experiences a major financial change. Now, a major financial change could be a large bonus from work, starting a part-time job, or taking out additional money from a retirement fund early. Self-employed individuals do not need to fill this form out. They should instead make payments quarterly to withhold enough tax to meet their federal obligations. Now, what are the changes between 2019 and 2020's Form W4? The old W4 asks for exemptions, and the new W4 asks for dependents. So instead of asking if you're single and 1, married and 0, they're going to ask how many dependents you have. The IRS's main objective, whether or not they accomplish it, is to increase the transparency and accuracy of tax withholdings. The new W4 focuses on adjustments such as 1040 income derived from other jobs, additional income such as Schedule C income, and itemized deductions. Now, the new W4 is not easy to fill out the first time. When filled out using the recommended procedures, annual withholdings more effectively match the annual tax liability. This means that people who are used to getting a large refund every year may not get one if they fill out the W4 utilizing it in the appropriate manner. When an employee fills out a W4 with only Step 1 and Step 5 filled out, the withholdings would be the same as the prior year's single and 2. Now, you can see how this would lead to problems with people who are used to getting a large refund, because now instead of withholding at single and 0, people are going to be withholding at single and 2, not filling out that Step 4C on the Form W4, and not being able to utilize their federal withholdings as a savings account. To have no federal tax withheld, an employee would simply just write exempt in Step 4 of the W4. Just a quick rundown. After this, we're going to go through some examples of filling out the W4. If you don't have time to sit with me throughout the examples, I appreciate you going through the video this far, and we'll teach you how to just get the W4 filled out far enough to turn into your employer. Now, just fill out Step 1 and Step 5 to withhold at the highest rate. We also recommend adding some additional withholding in Step 4C in order to ensure that your withholdings match your tax liability. We always recommend doing a little extra withholding on Step 4C, as withholding too much is always better news than withholding too little at year end. Now for examples, we're going to use some of our friends from the awesome show Rick and Morty. Our first employer profile is going to be nice and simple. It's going to be Summer, starting her job with Mr. Needlefold. Her hourly pay, he's very generous, is $18 per hour. She's estimating that she's going to have $18,720 of income this year. Summer is single. And on her last tax return, she had the standard deduction. Summer doesn't own a house, she doesn't pay any property taxes, so she's probably going to utilize the standard deduction again this year. For Step 1, Summer's going to put her name, last name, and social up here at the top. She's going to fill in her address. She's going to put her filing status here. And Step 2, she's going to skip completely because she only receives one W-2 during the year. In our future examples, we will be utilizing this step. Summer does not currently have any dependents, so she would skip Step 3 as well. On Step 4, she's going to put a little bit of extra withholding from each paycheck of $20 just to ensure that she has enough money when that new Jeffree Star palette comes out on sale. She's then going to sign and date the form, and her employer is going to fill out this bottom portion, and she's done. That took her very little time, and now she's going to be able to have a pretty good refund at the end of the year and not have to worry about filing a tax return and owing money. Now, if you're curious as to how much she would have withheld if she did not include that $20 of extra withholding per paycheck, we take the IRS publication 15T, which will be included in the Dropbox link in the comments section. We take her withholding table from that. We see that she's paid bi-weekly, so we're going to use that table. She's single, so we're going to use the standard withholding under single. And we're going to go down to the amount each of her paychecks are going to be to derive $25 of withholding from every single paycheck. Now with the $20 of additional withholding on top of that, we're going to be withholding $45 from every paycheck. For our next employee profile, we're going to use our friend Mr. Meeseeks. He gets paid a salary of $50,000 per year from the Meeseeks Box Corporation. He files head of household. In order to help pay for his kids' college, he does intergalactic Uber edibles. His gross income from that per year is $25,000. He has spacecraft expenses throughout the year of $10,000. And as we mentioned earlier, he has one child under the age of 17 years old. He had the standard deduction on last year's tax return. Not a whole lot changed, so he expects to take the standard deduction again this year. He also had an IRA contribution of $1,000, which is interesting, seeing as though Mr. Meeseeks doesn't live that long. Now step 1 is going to be the same as Summers. He's going to put his first name, last name, and social security number on this form. He's then going to put in his address and filing status of head of household. He is not going to fill in step 2. His Schedule C income is going to be reported in step 4 of this W-4. Now in step 3 of that W-4, we're going to claim $2,000 as he has one dependent under the age of 17. And we're going to move that over to step 3 here. On step 4, we are going to put his net income of $15,000 from intergalactic Uber edibles. As he had $10,000 of spacecraft expenses, we're going to deduct that from the gross to derive the net. And your annual net is the thing that we're putting on step 4. So we're going to run through the deductions worksheet here, as Mr. Meeseeks had $1,000 of deductible IRA contributions. If you know that you're going to take the standard deduction in the current year, there is no need to fill this form out. However, I wanted to introduce it now as we had the information too. So Mr. Meeseeks has $10,000 of annual interest he pays for his house. We enter the $18,650 here from the head of household line. We see that that derives a 0 here. We know he has a deductible IRA contribution of $1,000. Therefore, we will find our result for step 4B of the form W-4 here, which will be $1,000. We will then enter that result in this step 4B. We'll have Mr. Meeseeks sign here and put the date here, and his employer will fill out this bottom portion. Now, for Mr. Meeseeks, it's going to be a lot harder using IRS publication 15T in order to derive his withholdings from each paycheck. So we are going to use the Income Tax Withholding Assistant for Employers. Again, this form is going to be in the Dropbox link below. We see that Mr. Meeseeks is paid every other week. He's paid $1,903 per paycheck. He used the 2020 Form W-4. He files head of household. He did not check the box in C in step 2. We see that he had a $2,000 deduction for having a child. We see that he has $15,000 of other annual income and a $1,000 deductible IRA contribution to show that he's going to have $119 of federal tax withheld from each paycheck. Another example of completing the Form W-4, we're going to use Beth and Jerry. As we know, Beth's a horse surgeon and she makes $100,000 per year. She's paid $4,166 twice a month. She's married to Jerry still. Jerry's advertising income is $25,000 per year. They have 2 dependents, one child under 17 and one child over 17. They took the standard deduction last year and they don't plan on itemizing this year either. So just as the other two W-4s, Beth is going to put her first name here, her last name here, social here, fill in her address, put in that she's married filing jointly, and now in step 2 we have 3 options here. She could either A, use the estimator at the IRS's website. This step is a bit tedious. While it does provide you an accurate number, it'll take about an hour to do so. We can do step B, use the multiple jobs worksheet that's attached on page 3. We're going to do that option as it fully utilizes the form W-4 and allows you to quickly fill it out if you are in a pinch. She could also use step C. Now, step C, checking the box, is only good if the two incomes are similar in gross pay. So if Beth made $50,000 per year and Jerry made $50,000 per year of W-2 income, then we could say, okay, this is a good option for them. Since Beth makes a lot more than Jerry, this option would not be good for them, as Jerry would under-withhold and Beth would over-withhold. So we're going to go to our worksheet here to see that Beth makes $100,000, so she's right here, and we see that Jerry falls in this threshold. To derive $5,900 on now this is from page 4 of the form W-4, and now we are going to use that figure for the multiple jobs worksheet. Now we're going to use step 1 here, as there are 2 jobs. We're going to use that $5,900 that we derived from the table on page 4. We're not going to use step 2, as step 2 is for 3 or more jobs. Now with step 2, you could do step 2A, and in step 2A you take the higher paying job and the lower paying job, the middle job, on that graph that we saw earlier, get the result for step 2A. For 2B, we're going to take that middle job and the last job and see what figure we derive from that chart to get a total for 2B. Then we're going to add the amounts on line 2C and use them as we are going to use the amount on line 1 for this example. We are now going to divide that $5,900 by 26 to derive $227, and that $227 is going to go on our line 4C here. We're then going to put in Summer and Morty for our dependents to derive $2,500 for step 3. And then we're going to have Beth sign and date her W-4. We see that she has an extra $227 being withheld. We have the dependent information here. So we are good to go on Beth's W-4. Now, how much tax is actually going to be withheld from each of her paychecks? We see that she's paid $4,167 twice a month. She files married jointly. She did not check the box in step 2C. Her total dependents are $2,500. She withholds an extra $227 to compensate for Jerry's income. So now we see that she is going to have a total of $482 taken out of each paycheck for federal withholdings. Now for another example, we're going to be utilizing the itemized deductions for this one. We're going to have Rick and Diane. His salary is $78,000 per year. He's paid $3,000 bi-weekly. He's married to Diane and her income is $50,000 per year. They have 2 dependents, 1 child under 17 years old and 1 child over 17 years old. They have annual dividends and interest income of $500, and their itemized deductions are $34,300. Then they have an IRA contribution of $1,000, so we're really going to use every single step in the form W-4 to fill this one out. So, as with the other W-4s, we're going to start with all of his details, mark married filing jointly, and utilize that step 2B to get an accurate withholding. As we can see here on that multiple jobs worksheet, we're going to use that line 1 for the 2 jobs. We're going to first find Diane's income up here on the top line. She makes $50,000, so we're going to go down to Rick's gross wages of $75,000 to derive a total for $6,570 to use on that step 1. So we're going to put that in step 1. We know there are 26 pay periods in the year, so we're going to derive a total of 252.69 here for step 4C. So we're going to enter that amount here on step 4C. And then we're going to fill out all the other pertinent details to this W-4. We know that there are 2 dependents. We know that they have $500 of other income. And now here's where this W-4 is going to be different from the other ones that we have done. So we're going to enter the total itemized deductions from last year's tax return here. We're going to enter the total amount of a standard deduction for the married filing jointly return here to derive a total of $9,500 here. We're going to enter an estimate of the deductible IRA contributions here to derive a total of $10,500 to put on step 4B of our W-4. So we're going to insert that right there, and that W-4 is completed. So with that, we're going to go to the IRS publication 15T to show you how the deductions and adjustments really affect the W-4. So we can see that at the income level Rick's at, he should be withholding around $229 typically. But with his situation all figured out, he's going to be withholding $341. Now Rick should probably withhold more than this if he likes to get a refund, because this is just going to cover his liability. It's not going to do any more than that. This has been the 2020 Form W-4 presentation sponsored by Burke & Cox. I'm Ray Langley. In the comments section will be all of the pertinent documents in order to get that W-4 filled out appropriately. If you have any comments, questions, or feedback, I've included my email in this slide, and I appreciate you taking the time out of your day to listen to this presentation. Have a wonderful day. Bye-bye.